Hey everybody, how we doing? This is Jeff, Swing Trade Warrior with warriortrading.com. It is late on Friday night. It's 9 p.m. Pacific. Just now getting to my watch list for Monday. I like to do it Friday after the market closes. One, while I still have my thumb on the pulse of the market because the week is ended. And two, because I like not having anything to do all weekend. I'm very busy during the week, and so I don't mind finishing up late on a Friday, so it gives me a little bit more time to enjoy my Saturday and Sunday, and I don't have to be rushed to get back to work a day early. Okay, so the first thing I always do is a little market analysis here, looking at the daily chart of the S&P. This is a super ridiculously strong day on Friday. There was a ton of bullish activity. The market was grinding higher all day long, and what started off as a sell-off here back toward resistance and under this 205 area resulted in testing and making new 2016 highs. So looking at this here, we're almost back to our correction levels, or pre-correction levels here before we sold off down to the 181 lows here, the 52-week lows. So this chart is still bullish, even though the market is teetering with overbought. It's not technically super overbought. What we're seeing here, these moves up and these little pullbacks, where we flag out and kind of move higher, pull back, and then we move higher here and pull back, and then now we're moving higher with a little pullback and a move higher. So one of two things is going to happen. The market's either going to keep going or it's going to come back in and keep testing this area. It might realistically test the 208 area before coming in. 208, oops, that's way too high. 208 area here is, or 2840 is going to be our next area of resistance to test. If we can get there and we tap this 208 area, we might see this little pullback action like we do every time we test a new resistance area. So something to keep in mind. Not a lot of range right here, so it's probably not going to be super volatile, which is kind of helpful. So one of the things we always do is run our scans after the market closes here, and we go through and we look for the best bullish and bearish setups, because ultimately we don't really care too much about market direction. We have trade setups that are suitable for either direction, and so this day is no different here, and these market conditions are no different. We don't know what we're going to get, so we're ready to go either way. ACTG here. I like this one because of this. Let's see if I can zoom in here a little bit on it. I like this one here because of the wedge that it's forming. It is moving into. Let me throw up some. All right. I like this one here. We have this bullish move up off the bottom, right? So we have this big sell-off after earnings, stock drops down about 50%, and then it slowly starts grinding higher, crosses up over the 20, which is the purple line, crosses up over the 50, and now we're getting the 20 and the 50. Let me turn off this market map here so it's a little easier to see. We're getting this cross here, the 20 and the 50, which is a bullish indicator when the shorter term moving average goes above the longer one here, and we'll break out over the top of this resistance area, which is the 405 spot. So I'm looking for long on this over 405. I'll definitely consider adding at 420. We have a lot of room here. You can see that we're going to hit a little bit of resistance at 440. What is that, 449 or so, and then again, just under $5 here, we'll see some resistance. So there's a lot of room here on this chart once we start trending higher and we can get out of this sideways wedge. And I think that this one moves higher. The thing that I like about this is that the pre-earnings volume was a little bit lighter, gap down, and then since then it's been recovering. We have a much higher relative volume overall than compared with the past few months prior to this particular event. So that's what I like to see. I like to see the volume coming in here as we're testing the top of this spot, the top of the breakout spot. You can see we have a relative volume spike, meaning that there are more buyers interested in this than there were in the previous few days, actually previous week and a half or so. So keep an eye on this one. This will be on Watch Monday, along with LXRX. God, I just caught a glimpse of myself. It looks like I'm in a tanning bed. These are just 6 27-inch 4K monitors, which you could probably tan under. I should probably put them in nighttime mode because my eyes are going to be raisins by the time I'm 40. Alright, so what I like about LXRX is, again, we have another move up. Following earnings down here, here's the earnings event. Early March, we have this big move up, flags out, big move up, flags out, and now we're tapping this resistance area at 1252. You can see this top. This top has been an important pivot in the past. You can see it was a support area for a little while back through here in late 2015. It did act as a resistance area for a short time prior to that, and then again resistance back here. Now I bet if I zoom out, we'll see more correlation. Of course, this is back in June of 2014. You can see it was resistance. It was a pivot for support in the 1250 area, roughly right there. So the point is obviously the 1250 area is significant for the stock. So why do we think it's going to get over the 1250 area? Well, it's totality of the circumstances. One, we know that the market is probably a little bit more bullish than bearish right now. We have no indications saying that the market is going to come down, so that's helpful. Two, we know that the stock put in decent earnings and that it's moved up higher following the earnings event. You can see the red E down here on the chart. So you know that this thing has had a history, at least a short-term history, of moving up higher, consolidating, and then moving up higher yet again. Also, we have the stock trading above all the moving averages, short-term and long-term. So it is in a bullish trend right now. So assuming the market continues higher, assuming the stock stays strong and no news comes out to push it down, and assuming everything stays the same, I think that we have a good opportunity to get this over 1250, which is cool because then we get a move to ultimately looking for a move here to about 1340 or so. Excuse me, not 1340, a little bit lower. Ultimately looking for a move to about 1320 or so from 1250. That'll be the first step. This does have a 70-cent ATR, so it may do it in one day. It may take a couple days to do it, but then you can see we're going to have room up to 1370 after that. So we're going to look at just about 2 deviations of the ATR. The first one will put us here at 1320, the second one at about 1370, more or less. And so over the course of 2 or 3 days, that'll be our target for profit. Definitely going to wait to buy over the 1252 area, 1250, 1260 area. Now the stock closed at 1249. So here's one of the issues that we run into in this particular scenario. We'll see a stock close just above the trigger price, or just at the trigger price, within a few pennies. And when the market opens, lately the market tends to open higher or lower, and it doesn't really open flat, so we get these little gaps, and it'll tend to drag stocks with it. If we get a really big gap, everything will gap up with the market, it'll fade, and then it'll either move higher or lower throughout the rest of the day. The problem is a lot of times these gap over our entry, or they squeeze first thing in the morning because everybody's piling into this thing, and then it sells off and comes back. So I don't trade swings in the first 15 minutes during the open range because of the volatility and the high percentage of false breakouts. You can avoid having a lot of losing trades by just waiting 15 minutes for the market to shake everything out, volume to come in, and a trend to be established using the 5-minute chart, the first 3 5-minute candles. You do a 5-minute open range break, you go higher or lower depending on which direction the price action goes between the 15-minute open range, and you have your trend established. So this is no different. What'll happen here is if the market opens much higher and this gap's up, I won't chase it. I'll let it fade. If it comes back down anywhere near my 1250, 1260 entry spot, I'll throw an order out and look to get in on a bid and maybe add on the way back up. It's always riskier pulling. It's always risky taking full size on a pullback, so we have to make sure we're absolutely right on the trade. I'd like to add into strength, not necessarily on weakness of a pullback. So we'll get long. We'll wait for the market to gap up, this go higher, and then it'll sell off. We'll look to get in on a bid. If not, we'll wait for the first 15 minutes to be the first 15-minute open range to be established, and we'll look to take a position over the highs as long as the open range isn't huge on this, which it isn't normally. So long on this is going to be somewhere between 1250 and 1260 if we get ideal conditions. All right, next name is going to be RYAM. This one is very similar pattern to the ACTG we looked at first. you can see here we got this nice little top forming here after here's the earnings event. This thing slowly grinds higher, crossed over the moving averages. The 20 is above the 50 here, so we're in a faster, or we're in a strong uptrend. We're approaching the 200 EMA here, looking for a break over that potentially, but ultimately we will draw out our levels here for targets. Okay, so first target realistically is going to be that 200 EMA area. Oops. Zoom in. Okay, the 200 EMA area. It is going to act as resistance. We're looking for a long entry here over the top of this resistance. So you can see this move up, this consolidation period where it's traded. It's actually a pretty big range between $10 and looks like about $9 here for the past couple of weeks, and now we're tapping that $10 spot again. We're looking for long over $10 here, based on the 58-cent ATR down here in the quarter, or this blue line on the volume bars. You can see this is the ATR. Based on that, we can expect a move to 1074 in a day, maybe two. So we will be patient on this, and like I said, the first target's 1074. It's the 200 moving average. If we get over that, I think we have a pretty good shot at getting to the 1150 area. The 200 moving average at 1074 is resistance because everybody else is going to see the same moving average there, because that's where the 200-day average price based on the last 200 periods is going to be. So a lot of people tend to gravitate towards the averages, and if you look back here, it also happens to be a resistance spot from October and then again in December 2015. So that is a little bit of a pivot. If we get there, that's great. We got 70 cents on the trade, and then the next target after that, if we break through, will be 1150. Again, definitely a big pivot here. It was a big support area. Previous support will become future resistance, and it was also somewhat of a pivot, right around this area. So RYAM, will same kind of entry as LXRX. We're going to have to wait for that open range to be established, because I'm looking for this over $10, somewhere over $10, but its close was at $9.98. So not exactly ideal setup here, but we'll see what the open range brings, and we'll look to take it again after that first 15-minute open range has been established, and we'll look to add into the trade possibly higher. If it gaps higher, once again, we'll wait. We'll want to see this $10 area that is acting as resistance currently become future support, just like future support become future resistance, right? So we're going to just look for the flip of that. If we can get filled near $10 on a pullback because the stock gaps up, then that's what we're going to do. Okay, so that's RYAM. I want to throw up one other name here. I said earlier, I like to have both long and short options ready to go based on what whatever conditions the market wants to give us. So the video's out of whack. Oh no, I'll have to take a look at that. This one is my short choice for Monday here, FOSL. Looking at this here, this chart, okay, so we have this earnings gap down, we trade sideways for a long period of time, we have this earnings gap up, and then it runs up here, almost tests the 200 moving average, and then it sells back off. So not exactly sure, this beyond the earnings events, this thing doesn't really like to trend very much here. You can see how it has this history of gapping, staying sideways, gapping, staying sideways, gapping, and then it's not really, it's coming down consistently, but it's not really doing anything beyond that range. So we're not looking for huge moves here. I don't expect this thing to necessarily break range and come all the way back down, but if it does, we're going to be ready. You can see there's pretty clear support here at 42. That'll be our entry spot under 42. We have a confirmation of the beginning of a trend reversal with the 20 EMA, and now a close below the 50 EMA. So we're going to look to add on a new candle low here. Not much resistance down below this, so potentially have room to the 39.25 area or so. If we get there, that's great. But like I said, this is what I'm watching here for an entry under 42 on this. Money Master asked me, is that the TAS indicator? Yeah, so when I'm doing swings, I have a couple of TAS indicators that I like to use. I use the TAS boxes and the TAS market map. I had the market map off because it was hard to see, but I use the boxes and the market map on the daily time frame. I'll use the Vega and oops, let me see here. On other time frames, you can see on the 5 minute. Jesus, couldn't think of the time frame. I use it on the 5 minute, and primarily for reversal trades intraday. That's when I like to use the Vega. Okay, so those are the trades for Monday that I'll be looking at. Historically speaking, for me personally, because I track all my trades and I keep good statistics, I do not have the highest success rate trading on Mondays or Fridays. Tuesday, Wednesday, Thursday tend to be my strongest days, statistically speaking. Mondays, you know, there's a lot of things happen on Mondays because of whatever happened on the weekends. I don't know. A lot of things happen over the weekend that can affect your trades. So, and Fridays, you know, kind of a similar thing. People are doing weird stuff. Options are expiring. So news is coming out. The setups are decent. They're B quality setups. I wouldn't say any of them are super exciting. So I'm not sure whether I'll even take any of these. We'll see what trades present themselves. There are no notable earnings on Monday that I'm interested in. I'm not looking to put on any condors or any iron condors or anything. But however, we are coming into earnings season here shortly, so I will be definitely putting on stuff as we get closer to those dates. So keep your eyes out. We'll go over those trades during that time period. But for right now, we'll just kind of lay low, see what the SPY wants to do. And like I said, we'll focus on our setups here. If you guys have any questions as you're watching this back on a recording, feel free to email me, jeff@warriortrading.com. Be happy to answer your emails. I do work all weekend, and that includes from the golf course because I have no life. So it's golf and work. Thanks. I'm not sure what the video. I'm not sure what's going on with the video. I am getting a bandwidth notice here saying I'm getting dropped frames. So I don't know. Maybe it's the light. It's cooking me out. But that's the end of the video, guys. Like I said, email me with questions. If not, have a good weekend. And take care. Thanks for stopping by.